Vision is not built on hype. You know what I mean? It's built on solving real problems. I like the concept of building decentralized applications.
This is Uncensored Grill with Tipo. No filters, no safety nets, just intelligence under pressure.
The real sacrifice lies in everything you have to sacrifice in your daily life in order to build one thing or multiple that you actually think will change the world. It's exceptionally hard to create real products, to scale a company, to build product market fit. It's not that hard to raise capital. The root cause, and what founders never really admit publicly, so to speak, is that they don't really have working products, so they have to focus on the tokens. If you want to build something, start by identifying the problem. Ideally, have the problem yourself. As an exchange, one of your value propositions is, I have all these people that will trade your token, and then at the same time, you set a demand, which is, hey, if your token doesn't get enough traction, we're gonna keep some money. It's ironic, isn't it? Incentives only work if you have a real product with adoption. What separates a fantastic founder from a good one is
Some founders build products, some founders build narrative. This guy built a battle. He built a battle. A man became the youngest sales coach in his company, built a delivery startup before delivery apps were cool, and somehow ended up at the center of a $400 million worth of crypto deals. He's seen 5,600 private market deals from the inside. He knows how tokens are born, how they die as well, and why retail keeps getting played like they are NPCs of this industry. And today, this man sits on the grill. Milad, how are you?
It's great to be here. Thank you for that warm introduction. I'm looking forward to talking to you today.
That's amazing. So here is what we're going to do. There's something we call the icebreaker. So we're going to
Okay, go ahead.
throw you off the floor. It now depends on whether you're going to be standing or you're going to be on the floor. So Milad,
Let's see.
let's start simple. When someone sits with you for the very first time, what's the wrong idea they usually have about you?
So wrong idea. I think maybe they take my kindness for weakness. You know what I mean? Like typically I'm quite a transparent person. I'm not really a person who tries to sugarcoat things or sell a dream. You know what I mean? And I think some people take that like as a lack of ambition or something like that. So, but I sort of know that like vision is not built on hype. You know what I mean? It's built on solving real problems. And if you're trying to solve problems, you need to actually address them, right? So probably that.
Okay. So guys, if you are watching this later, don't take Milad for granted. It can be really kind and it can be really difficult as well. Is that right?
Yeah, that's very true.
Okay. Now we go to the program of the day, which is the grill number 1. Because on Uncensored Grill, we don't take it lightly with our guests. We grilled you. That's what we are built upon. You finished high school rapidly and somehow ended up building infrastructure that handled $400 million. I mean, that's a large number. What were you running towards and what were you running from? Because you were finishing everything up really rapidly.
Yeah, so I'm a 32-year-old man now. So there's this big gap between 17 and 32.
Yeah.
But I finished high school early because I got a part-time job in sales. And I really loved sales, like real targets, real pressure. And when I was at school in the last year, all I can think about was working. You know what I mean? So I got an offer for a full-time role. And the only way for me to pursue that was I had to finish all my exams early. Otherwise, I couldn't take the role. So in Norway, you can take like your final year's exams independently. You don't have to attend the classes. So you asked like what was I running towards? It was this opportunity to work more with what I loved, And I wasn't really running from school. It was more that I just needed to finish it faster to chase what I was passionate about, if that makes sense.
Yeah, it made a lot of sense. But then I think that is really strange from Norway, allowing people to just take everything at once. Do you think that might push other kids to wanted to do the same thing that you do in order to just jump from A to Z?
Absolutely. I think people should do that. I mean, you should
Oh,
go toward what you're passionate about. But I have to clarify, like, it's typically only possible in the last year because you have to attend a certain amount of classes. But
okay.
like when you're in the last period, it's easy to just sign up for the exams only. And for me, it was a no-brainer because like all my mind was thinking about was my job. So
Oh,
it was like I just wanted to get out of this theoretical environment and into the practical
jump
talking to
into the
people,
war, jump into the battle, right?
Exactly.
Okay. And that leads me to my next question. At 19, you were selling, coaching, pushing. Who put that fire in you, or who fed you enough that you had to create that thing yourself?
Yeah, so I grew up in the east side of Oslo. It was not the richest side, so to speak. I had a single mom. She worked nonstop to make ends meet, and my sister always looked after me. So like the environment I grew up in was very like independent. It was non-negotiable. From when I was 15, I was working postal routes or in food stands or marking parking lots. So it's like I always had to be independent. And so by the time I was 19, I already worked in sales from I was 17 to 19. So it was quite natural to become a coach, right? Because I knew everything about the product, the sales funnel, the clients. And so it was the team lead decided like it's better for me to do sales for 2-3 hours and instead like focus the rest of my time on coaching the others and sort of increasing the whole level of the team, so to speak.
So also quick one, Milad. At 19, you are coaching people, and I'm confident to say this to you that you are not coaching just 19 years old. You were coaching people that are actually older than you. Is that correct?
This is a great question. And actually, most of the people I was coaching all were older than me.
For
Some of them were also people who started when I started, but it was more because everything was results oriented. I
okay.
had a fellow coach, and me and him were sort of the best salespeople there. And people just wanted to succeed. It was quite like a humbling environment where the amount of sales spoke for itself. You
There's
know
no
what I mean?
ego. There's no
And
ego.
I mean, there was ego in the sense that you want to have most sales, but in order to get that, you have to improve. And we try to create a culture where, like, let's just get better and improve and that's where you get respect for having more sales. If that makes sense.
Yeah, it made a lot of sense. It made a lot of sense. And I mean, you've built a lot of things, yes. But let's talk about the delivery startup that you built. Over 30,000 deliveries made, 150 plus drivers. What did that experience teach you about people that crypto later confirmed?
Yeah, so I've built multiple startups, smaller and bigger. The delivery company Ebby was probably the biggest, other than what we've built now. It was our real first big startup. When you build an MVP, you try to reach product market fit, you have real clients, and it was a three-sided marketplace, right? So you had the drivers, the restaurants, and then you had the customers. So and on top of that, we built the entire tech stack, the matchmaking engine to connect it all together. And it's not like now where you have Uber Eats and all of these services. They didn't exist in Norway at the time. So it's like you had to pave the way. But yeah, I would say what I learned from that experience, or what was the biggest takeaway for me, was I was responsible for the drivers, right, and the restaurants. So I got to hire a lot of people, and typically people who apply for these jobs are young people who don't have job experience, people who are have poor language skills, people who typically didn't have other opportunities in society, you know. And it was such giving experience to be able to help them uh, put food on the table. You know, in reality, you knew that what you had built actually had an impact on real people. You know what I mean? And
Yeah.
you sort of gave them access. It felt like you had something where you can give them access to something they don't have before. And I would say that is the biggest takeaway that we've taken into crypto, is that what I enjoy most is to create opportunities for other people. That's what my sort of motivation is. And now we're trying to do the same in the financial market. You know, we're trying to make it more equitable for regular people to access early stage. Because as you touched upon earlier, like right now, crypto is mostly early stage investors investing early, late stage investors getting wrecked post TGE, and people completely lose faith in the system. It feels rigged, right? And we can sort of dig deeper into that as well if you want to.
Yeah. We'll do that later. We'll do that later. It's something that I want your thought on as well. But I've done my research. Norway is one of the calmest countries in the world. And we both know, you and I both know, that crypto is the land of chaos. How did you combine these two words? The calmest and then the chaos. Why did crypto feel like home to you?
Yeah. It was in 2017 that we got exposure to Ethereum. We were already in tech, you know what I mean? I like the concept of building decentralized applications. And not me personally, but the idea of it. Um, so that was how I got into crypto. But in terms of Norway, I wouldn't say Norway predominantly is like really pro crypto. It's a country where it's optimizing for the middle class, and notoriously for entrepreneurs, it's quite difficult to work from Norway. Um, so yeah, I don't think the energy of Norway really matches the chaos of crypto. And in many ways, I think actually it's not just crypto; it's just like industry, you know. So I think if you're trying to build, you need fast pace. Norway isn't really fast pace. So yeah, we're working on a upwards hill in that regard.
That's beautiful. When you entered crypto in 2017, did you feel early, lucky, or finally in the right room? How did you feel? 2017. Take us back.
It was the first time I experienced people building in public, you know. And as an entrepreneur, maybe if you're in Silicon Valley, you can experience that all around you. In Norway, you couldn't, you know. For me, it was a great experience to see products and companies turn into speculation. You know what I mean? Because you speculate in the asset, but you also are investing in the company, and the company in the past, you probably remember it was very normal with public roadmaps.
Yeah,
You know what I
yeah.
mean?
The ICO,
Q1,
the
Q2.
ICO era.
Exactly. And so it was for the first time I really got exposure to investing at that scale and investing in things that were very idealistic. And obviously, if you're a new investor, that's very fun to do, right? So yeah,
So you felt as if you are in the right room. That was the feeling back then.
exactly.
That's beautiful. So I'm gonna be, I'm gonna ask you to be honest with me, yeah, on this one, please. I need you to be completely honest. Has your ambition ever scared you? Not the work, but the scale of what or who you might become. Have you ever been scared of that?
Yes, I'm only scared of it in the sense that I have been a founder my whole life, and you can tell that by talking to my mom, you know, my friends. You know, the real sacrifice lies in everything you have to sacrifice in your daily life in order to build one thing or multiple that you actually think will change the world. It's sort of some ways like sacrificing your time and energy and family in order to work for a greater purpose. You know what I mean? And if it's one thing that scares me with this type of sort of delusion or ambition, it's one and the same. It's that I have a beautiful girlfriend. I have a fantastic family. a nephew. I want to spend time with them. I'm doing this not only for the people, but also for my family, for my friends. This is why we do this first and foremost. And so, if anything, it's the fear of being locked into this, where you always say, one day, one day I will work a little less, or one day, but that day never coming, because at some point I want to start a family with my girlfriend or spend more time with my family. So.
So, Milad, quick one. You talked about your mom a lot. I mean, we've spent 15, 40 minutes together, and you've mentioned your mom like a couple of times now. How important
Mhm.
is she to you, to whatever it is you're building? How important is she?
Absolutely vital. I feel like she installed the thought into me that no, nothing is impossible. You know what I mean? You can. Sorry, let me fix this for a moment here. Nothing is impossible. You have to work hard to get what you sort of deserve. You know what I mean? And she worked all those years to give back to us and our family. And I feel like I have to work hard to give back to the family. It feels like a responsibility. I feel like a man, we have this type of responsibility where you want to provide. And for me, that goes in sort of a timeline. It is provide for my family, provide for my friend, and provide for the world.
If she
Um,
is, if
yeah.
she is sitting right there in that chair, what will she say about you?
She would say I should relax more, don't stress too much, maybe sleep more. Probably that. I think as a mother, that's the natural instinct.
In that's beautiful, and I understand you completely as well. I mean, you were raised by a single mom. Is that right?
Yeah, single mom,
Yeah,
and
we share that. We have that in common as well. So that was why I asked you about your mom. I was raised by a single mom as well, so we share that.
mhm,
But moving on, in one of your words, you said, and I quote, that altcoins feel invincible, uninvestable rather, uninvestable.
mhm.
Is that a diagnosis or an accusation?
It's a diagnosis. It's a result of
Tell me about it.
um,
I want to hear you.
Sure. It's quite simple, actually. Most crypto projects that launch now launch with investments done in early rounds. Early rounds have vesting schedules, right?
Yeah.
So VC funds invest at $1 and they get tokens over 4 years. And then what happens in reality is by the time there's a TGE, when the token starts trading publicly, it's not listed at $1. Obviously, the demand has been built up over several months, right? So it lists at, let's say, $20. That's when the public gets access to it. So what happens is you have an early cost for the early investors. You have an expensive cost for regular people, $20. And then for the next 3-4 years, those early investors get token unlocks and they sell every single month. And the person who invested at $20, it just goes down to 19, 18, 15, 10, 5, to the point where it reaches the costs of the initial investor, right? And so this is not new. This is not something people are just realizing. This is a problem that now people have realized over the last years, maybe this last year. It's what everyone is talking about. So it's not a secret anymore. People know this is a problem, and now we see the response, which is they don't invest. They know what's going to happen. When you see 20% on tokens are released, 80% is left, people look at that now and they know, they've learned. You know what I mean? So yeah, that's why I'm saying it's uninvestable, because people have understood more now how vesting works, and they are not willing to put capital into altcoins when it's fundamentally flawed in the tokenomics.
Yeah, yeah, yeah. And I'm not gonna lie to you, you hit the nail on its head. Because now, if I'm putting a single cent, not even $1, if I'm putting a single cent onto any altcoins, I gotta do my research. What's the unlock? What's the vesting schedule? Is it cleave? Is it whatever? Because you realize that The earlier investors, probably the seed round, the angel investors, they go in at like 50 cents, and immediately the token pumped to like, let's say, $15. They start selling, and they kept on
Yeah,
selling. They kept on selling till they even got to like $1, and you go in like $15, and before you know it, your $15 turned to like $10 in price, $12,
mhm.
$8, $4, and before you know it, zero. You are left
Exactly.
holding the dust. But yes, that was beautifully said. But moving on, you've seen over 5,600 deals. What's the one pattern that founders never admit publicly? The patterns that you've seen, but founders don't like to admit
Yeah,
to it publicly.
yeah. So just to give context for those 5,600 deals, we have built Spring, which is an infrastructure for VC funds. So when I talk about VC funds, it's from working with them for the last 4 years. I was also an early stage investor myself before that. So we've worked very closely with VC funds. Over 5,600 deals has been raised through our platform. So VC funds use our platform. They use it to collect money, and they use it to set up the deals, to manage investors, etc. And so, yeah, we have direct insights into what people invest in, how they invest, why they invest, etc. I would say, from a founder's perspective, the optimization really happens for the token price. You know what I mean? Like, most projects are engineered backwards from the token price, not forwards from the product. So I think the reason for that is very simple. It's exceptionally hard to create real products, to scale a company, to build product market fit. It's not that hard to raise capital. You know what I mean? So, like, I think the root cause, and what founders never really admit publicly, so to speak, is that they don't really have working products. So they have to focus on the tokens. And unfortunately, that's not sustainable longer term, and like, followers are also not
Products.
users. Yeah, exactly. Like, followers, especially pre-TG, because people follow you in the expectation of a token price. That's what I mean by optimizing for token price. But once that either meets expectations or not, it doesn't carry it through, because the product has to have real users for the company to be sustainable and grow.
We are treating tokens as a product. Most founders, they know that they do not have a product, or they do not have a working product, and they in turn treat tokens as a product. So,
Yeah,
like you said,
exactly.
they are
Spot on.
optimizing for the token, not for the product.
Yeah,
So PMF
that is
is
spot on.
the problem here. How do we
Yeah,
combat
I
that?
agree.
How do we tackle that? In your own way, how do we tackle that?
I would start backwards from the problem.
Okay. Okay.
People are building theoretical companies for problems that don't exist. I think the take should be, if you want to build something, start by identifying the problem. Ideally, have the problem yourself, and don't build something where you think someone needs the product. Base what you're building on actual people having the problem, get their feedback, and one client at a time, one piece of feedback at a time, iterate your product. Because right now, infrastructure in crypto is at such a good place where it's no longer an excuse to not build great apps. You know what I mean? I mean, we have low latency, we have great sort of output from the chains, we have MPC wallets, we have really simple onboarding. What we need now is people solving real problems and building real companies, and that's,
You would
as I said,
think,
very difficult.
Milad, in a same word, you would think what you just said right now should be common sense. I mean, the basics of building a product is to actually identify a problem. But
Mhm.
that common sense seems to be lost in the crypto world. Is it greed, or is there something else we don't know?
I would say, yeah, actually, yes, to a large degree. When you see the wide range of products, so to speak, that are being delivered, it is greed, because people are raising the money, they're not shipping the product. That's the mass majority. And if it's not greed, I don't really know. I mean, I'll give an example. Okay, I'm not saying infra is not important. Let's say layer ones are not important, but like if you have a 10,000 transaction per second blockchain, and you now are trying to build a 12,000 transactions per second blockchain, what is the real problem you're solving? You know what I mean? I don't feel like it's really a problem. So let me
It's
just
not
get
about
that
it's not
lighting
about the
notification.
speed anymore.
No, exactly.
Yeah. I'm loving this. I'm loving where this conversation is going as well. So there is a charter going around in the Discord, in the Telegram, that people are saying, or the retail says that the game is rigged against them,
Mhm.
and our VCs are saying that they are necessary. To you, who is lying? Is it the VCs or is it the retail?
So yeah, but both are right, my
Okay.
friend. That the reality is retail is being screwed over, and VCs have to get liquid somehow. VCs are a necessity, right? Because when you're a small company, you need funding. You need funding not for salary, just for the sake of building a product, doing marketing, having basic experiments, hiring people who can help you scale up the company. Like there are many things you should do in the beginning that is completely free. Everyone starting a company don't spend any money, but at some stage you need to scale that company up and you need capital. And the people who have the capital are early stage venture capital firms. They are absolutely necessary. The issue is they have no way to get liquid. Okay, so they invested $1, right? And it launches at 50, right? So the problem is not that they invested, it's that what happened in between, man? I mean, there was so much demand up to $50. Why can't they sell at $3, $5, 10, 20, 15, 50? Right now, how the system is set up is they have to sell on unlocks. And that's just a problem with the mechanics. You know what I mean? There is no place for regular people to access early stage rounds and trade them until we just built it recently. So I think VCs are necessary, especially also because regular people don't have the stamina or the capital to wait 2-3 years to invest in 20 companies, having 19 of them fail. That's the reality for these VC funds. Like you only see the one that succeeds. They don't necessarily have the expertise. Let's say if I'm investing in a robotics company, I can't look at that in isolation. I have to evaluate the 46 other robots companies to see if this stands out. So it demands so much time, effort, resources, and expertise to be an early stage VC, that they have a role. The issue is we have to get them out at some point before they can sell on unlocks. You know what I mean?
VCs are just necessary evil. You can't hate them, you can't like them. Is that right?
I wouldn't say they're an evil even, because you have to realize that they help the projects grow. Without the
Yeah.
VC funding,
Right.
we wouldn't be able to be where we are. I mean, it's easy to take the money, build a company, and then later complain that they got in early. You know what I mean? What about when we didn't have capital and we were struggling to scale? So I don't think they're a necessary evil. I think they are necessary. I think the problem is that there is no way to manage early stage allocations. At some point they need to get out, and currently the only way is selling on unlocks, and it's so clear that it's so destructive for the entire space. There needs to be a way to get them out before unlocks, essentially. That's
Okay.
how I see it.
That's beautiful. Sometimes ago or sometimes a while, you criticize exchanges a lot for extracting millions. So I want to ask you, if one of them offered you a partnership right now, would you take it or would you burn that bridge?
So I think obviously exchanges are good for providing people access to tokens. I think for that, they do a good job. They're a good source of distribution for projects. What I have a problem with is the extractive listing models for these exchanges. They require millions of dollars in some cases. They require tokens. They have mechanisms and deposits that sort of extract a lot of value from the
Milad,
projects.
can you give us specifics? Don't mention names. Don't mention names.
Yeah,
Or I know you've dealt with a lot of exchanges.
yeah,
Or can you say, okay, exchanges A ask us for $3 million, ask us for 10% of the listing of the token listed, blah blah blah. So give us specifics, but don't mention names.
sure. Sure. So us ourselves, we don't have a token now, so it's not applicable for us.
Yeah.
But we work with a lot of projects and VC funds, right? So a typical model is they take $200,000 to $300,000
Okay.
in USDC. They take $200,000 to $300,000 in the token. And typically the USDC, a portion of that is locked sort of as a deposit or retainer, and you can get it back if you meet a certain threshold of volume, for example. If you don't, they keep it, but sort of they have a lot of tokens in supply and they have a lot of control of how the activity is in the token. Obviously, a third element is market makers you collaborate with on the exchanges. But I think the biggest problem is that, let's say you have a token, okay? And you have built so much demand. Like for 3 years, you've been building, everyone's standing in line for your token to launch. The biggest issue is that when, let's say, 400,000 people go and trade your token, you don't get a single cent back on the speculation. You only can sort of earn on the token going up, You don't get a percentage of the volume, even though it's your token they're buying. For me, this is one of the fundamental problems, is that the exchanges are earning fees, but I believe, in my opinion, the project should also get a portion back of the speculation that happens on their token, so that imagine you're a project, you have one more revenue stream that can help you build and scale your company other than just the price. You know what I mean?
Yeah, and I think there is something, I want to touch back on 2 points. And the number one is that you mentioned about, the exchanges lock, the so-called lock, say $300,000 in USDC, and they will ask you that you meet a certain threshold of volume so that you get the money back.
Mhm.
There are rumors circulating around that there is, wash trading, laundering going around. Do you think that contributes to that part for project wanting to get their $300,000 back, and then they engage in, not so core, wash trading? I don't want to lay accusation fingers on anyone or to anyone, but you understand the point that I'm trying to make.
Yeah, absolutely. And I don't have any proof or
I also
exact
don't have any
details
proof
about
as
that,
well.
but
It's just rumors.
I do think it happens for sure. Like that's my hypothesis, at least. It's just a math question, right? Like how much would it cost you in fees versus getting the retainer back? But yeah, I think it's a little ironic that as an exchange, you sort of, one of your value propositions is, I have all these people that will trade your token, and then at the same time you set a demand, which is, hey, if your token doesn't get enough traction, we're going to keep some money. It's ironic, isn't it?
Yeah, yeah. And on the second part, you made mention about, getting a fair share of the volume through the speculation. You are speculating my token. It's fair that I get something in return. And that leads
Yeah.
me back to the NFT royalties. You are familiar with
Mhm.
NFT royalties. And I think that
Yeah.
model should be transferred into token speculation as well. If you are speculating around my tokens, the volume is going up. I, as a project founder, talking about the volume, talking about the tokens to my people. My people started talking about it to their people. In turn, I'm doing some form of marketing, and they are coming back to speculate my tokens on your exchanges. It is fair to say that I should demand some percentage of that speculation. What do you think?
I absolutely agree. I think this is the future for how trading should work. And also, we see it in decentralized exchanges, right? Because projects have to supply initial liquidity. Usually they take some of the money they raised from and they take the supply of the tokens, they provide liquidity. And then the automated market maker platforms, they give a sort of rebate for providing liquidity, right? So we already have fee rebates for people who supply liquidity in decentralized exchanges, but nothing of this exists for centralized exchanges. And this is where I challenge all the big exchange founders. Like, if you are for the projects, you are for the people, put your money where your mouth, put your money where your mouth is, because the reality is, a project might have $1 billion in speculation and not see a single cent of that come back to them.
Which is very, very bad. Which is very, very bad.
Yeah.
I think more people like yourself should start calling this behavior out.
Mm-hmm. I agree. And
about it.
Another thing you have to consider is, okay, let's say I raised 10 million. That 10 million is now the runway for my company. Every month I spend some of that, At some point, that 10 million runs out, but I might have a token, I have a treasury. So what am I supposed to do? Should I raise more capital, like an endless loop of dilution? Or probably in most cases, I need to sell some tokens, right? So it's like, then that is the necessity. I have to sell my own tokens to run the company. So like maybe if we introduce another revenue stream, it can help people with not having to issue more tokens or selling their own token.
That's beautiful, and I hope that the thought leaders in crypto Web3 will probably look into this and then have a roundtable talk and come up with something ingenuity. But that's brilliant from you. So let's talk about fairness in crypto. I mean, you talk about fairness, but isn't fairness in crypto the same as purity in politics? A great idea that dies the moment money enters.
I think capitalism is driven by incentives.
I agree. Completely
And
agree.
if you set up the right incentive structures, people will follow them. That's my take. And I agree that it is a challenge because it's a monetary industry, but I also think we still have a long way to go to change the incentives. And I'll be more specific. We have one example here, which is the exchanges extracting fees from that can be given to projects. Yeah. Another thing is that there's no way to invest early for regular people, and that is sort of the structure is problematic because it creates a gap between early and late. There are many things in crypto where if you change the incentives, you can make a fundamental change. So I believe still capitalism will still exist. You cannot sort of surpass people's desire to earn more money, for example, but you can align the incentives so that opportunities are more equitable. You know what I mean?
If I've learned anything right now, is that there is a problem in incentive alignment. Am I right? Correct? Do
Yeah,
you
correct.
have any counter proposal that someone watching later, or a founder, or exchanges, or a project, a brand watching this episode later could take a cue from what we've discussed so far?
I can use multiple. If I'm going to use examples, I can use the ones that we apply to our own company. So I'll give one example, which is on first.app, we make it possible for people to trade locked tokens. We give the projects a portion of the fees from the earnings. We get the VC funds a portion of the fees for making their SAFTs and SAFEs tradable. And we give people who refer other people a portion of the fees for just bringing more users in. So here we have a fee we charge, and for every single time a trade happens, all of this goes back to every single ecosystem participant. So like I would just say, I cannot speak on behalf of every product. I can just say, give all your ecosystem participants part of your upside, because that gives them an incentive to further grow you, you know.
That's beautiful. And quick follow up. Let's talk about sustainability. What you just mentioned right now, do you think that's sustainable to keep you afloat, to keep the people happy? Because there is a saying that goes, "Do not start what you cannot finish."
Yeah, I think it's absolutely
Have you done the math?
sustainable.
Let me put it this way. Have you done the math?
Yeah,
Okay.
yeah. I think it's sort of like a flywheel, right?
Okay.
You might say, oh, okay, let's say I charge 3%,
Okay.
okay,
Okay.
and I give 1% to each participant, okay, 4%, and then I take 1% myself. Um, and the fees that other people get are an investment. It's an investment because they have a reason for it to grow. You know what I mean? Like they have an incentive to make you use the product. And the best example I can give for this is the proven go-to-market strategy for every big exchange, which is affiliate marketing and referrals. It's that almost every big influencer has a referral link. They use that link to invite people to join an exchange. And this is the number one way exchanges grow. This is what they compete with each other on. So it's proven in that scenario that if you give people a stake in the upside, you can have that as a successful go-to-market strategy. And you might say, well, for every referral, I lose 40%, but like it's 40% you wouldn't have, you know? So it's like, I, I think people shouldn't be afraid of investing in incentives for others as a growth strategy.
That's beautiful, and I'm happy that you've done the math. So you are not just assuming. You know what you're saying. You know what you are talking about. That's brilliant from you, Milad. I must commend you for that. Moving on, there is something that I heard. I heard founders are so afraid, they are scared to build. So I want to ask you, why do you think founders are scared to build honestly? Emphasis on honestly. Why do you think so?
Man, I'm gonna give a hot take here, and I think I don't think people. I think you have a lot of great builders, okay, but I don't think most companies are backed by great builders that are building great projects. Especially in crypto, I think you have a lot of great marketers. Um, I think you have even great builders in the earliest stages, building simple infrastructure, building simple tooling, but it's not the same as building a sustainable, scalable company that is user facing. You know what I mean? I think even we have a lot of B2B companies in Web3 that are performing very well. What we're lacking is like super apps. So it's solving a real problem, which is very difficult, and finding product market fit. This is the first step. You know what I mean? And then once you have product market fit, is scale. And it's very difficult to have the right team to be able to do both of those, you know? So my take is we are not solving important enough problems. Even if we're not building good enough user experience so that my mom can use it, and we are still not masking blockchain technology enough so that it's abstracted from the user experience. You know what I mean? Like, and also the product has to be transformative beyond crypto. You're not competing. Let's say you build a social app in Web3. You're not competing with other social apps in Web3. You're competing with Facebook and Twitter and Instagram and Snapchat. It's like the product has to be competitive outside of crypto. It has to be
Globally.
better globally outside of crypto. And then you can say, on top of that, it's built on crypto, you
Yeah.
know?
Yeah.
So it's like, we think too much in our little
In
bubble.
our box.
Uh,
We are boxing ourselves.
yes,
And I've been
exactly.
saying it for years that, okay, now we are on a platform called Riverside. You are probably in
Mhm.
Norway. I'm in Lagos, Nigeria, and then we are having this podcast. I could
Mhm.
care less whether Riverside is built on Python language or on JavaScript. I could care less. I just want to come on Riverside, have a call with Milad. Everything goes well, and then I go home to my kids. And
Exactly.
blockchain should be that way as well. Nobody cares whether it's built
Yeah.
on abstract blockchain, whether it's built on Ethereum layer one, or whether it's built on Bitcoin native platform. We don't care. We just want to come on this platform and do our thing and go home. And like you said, we are not solving good enough problems. We are not solving good enough problems. Milad, this is this is really cool, and I'm enjoying every bit of this conversation, and I hope you are enjoying it as well as I do, because this is beautiful. Moving on, let's talk about first the product you're building, not the futures. I don't want to talk about the futures. I want to talk about the
Mhm.
fights. What problem pissed you off enough to build first?
Yeah. It's very simple. I am an early stage investor. I'm also an investor in altcoins regularly, right? On one side, I have early stage investments and I'm completely illiquid, which means I invested $1,000 on paper. It's worth 30,000, but I'm locked for 4 years. It's a big problem. Okay. Uh, on the other hand, I'm looking at a project that I didn't invest early on that is so fundamentally solid, but I know for a fact that unlocks are coming for 3 years and I can't justify investing in it. It's too expensive, the valuation. That is the actual problem that I am facing and that millions of other people are facing. Um, First, makes it possible for you to buy your favorite tokens at a discount to spot. It's that simple. It's like, the Honey plugin. Uh, Before you check a token, you can go on first to see if you can buy it cheaper than the market price. And then the question is, why? Well, because you are buying tokens that are locked with a vesting schedule. And how this works is we make it possible for early investors to sell. We make it possible for regular people to buy at a discount. And as a result of that, because the early investor bought at $1, the price on Binance is 50. Now it's trading at $25 on first. The buyer gets a discount, the seller gets out, and the next time it's an unlock, the guy isn't 50x anymore. It's been replaced by the $25 buy, right? So now the new buyer, he's just 2x, right? From 25 to 50. And because we have increased the cost outside of the exchanges, there is less sell pressure. So this is sort of first broken down into the simplest way I can explain.
Yeah, that makes a lot of sense, and I'm confident, or let me say, I'm sure that if this episode gets out and people truly understand what you're building, I think they're gonna use it, because I myself, I would love to try it out. I'd love to use it. I mean, if I'm an early investor, I invested a token at $1 for a token, and then you are saying that using your first app, I'll be able to get out at, let's say, $3, and then
Mhm.
someone will be able to get $3, and then they might actually be able to get out at $7 as well. Is that what you're saying?
Yeah. So what I'm saying is you have the early price, you have the market price,
Yeah,
and
yeah,
then there's no way to trade between this.
yeah.
And we are building the first platform where these people can meet in the middle,
That's it.
So the retail doesn't have to pay full price. Let's say they pay 30% discount, but like the guy who paid $1, okay, so it's not selling at 10, he's selling at 7.
Yeah, that's
But
good.
still he's 7x,
That's what I'm saying.
you
That's
know?
what I'm saying. That's what I'm
Yeah.
saying. And
Yeah.
everyone should probably be using first. Everyone should. I mean, your product makes
Yeah.
a lot of sense. It makes a lot of sense. So,
I think we
uh,
just need more listings.
don't worry, don't worry. I mean, it's you're getting there. You're getting there. You need the first person to list, and then that's it. Once the first person comes in,
Yeah.
the rest follows. So it's all about the network effect from there on, and I think that's beautiful. I want to ask you a quick one. I want you to see me as a 5 years old boy who knows nothing, and then I want you to explain the low float IFD mess, as if you're explaining a rig game at a casino.
Yeah. All right. So when a project creates a token, they have an overview of the total amount. Let's say 100% of a project's token is 1 million. Okay, so this is all tokens that will ever exist. When the project launches, typically they don't make all of those million, like the full million, tradable. Okay, typically how it works is some of those tokens, for example, 500,000 of them, are locked so that they get released over multiple years. For example, 2 years, 3 years. Okay. And the reason it's why it's like this is because, as I mentioned earlier, these early investors, they invest at quite low prices. If they were to get all their tokens at once, then they would likely sell very early. So it's a good idea to sort of split it up over a longer time, because you don't have all these cells happening at once, But what happens in reality is, so I have 1 million tokens. Now I'm launching my project. I'm having my TGE. What I make possible is only for a part of those tokens to trade. Let's say 200,000. Okay. So 20% of the tokens are now trading. The issue is that the value of the token price is based on the trading of only those 200,000. So the value is based on a limited amount of those total tokens. And the issue is that at some point, more tokens, every month are coming into the circulation. It goes from 200,000 to 250, and then 300,000, and then 350 and 400,000. For every month, more tokens comes into circulation. And when more tokens come in, obviously the price goes down, right? Because typically when they come in, the price goes down because people are selling.
Definitely.
So low float, high FDV is sort of the explanation of the ratio between the amount of tokens out now and the total amount. So in my scenario, I said 200,000, right? Out of 1 million. So the ratio is like 20%.
Yeah.
You can think of it.
Yeah.
So typically the lower the float, like if it's 10%, if it's 5%, that holy shit, 95% is still not unlocked. That means all the sell pressure is coming.
Definitely.
So low float, high FTV means a small portion of tokens are trading, which is a problem because it creates an artificial FTV. The price isn't really that FTV because you haven't factored in all the tokens that are still to be released.
I'd rather take a token with, let's say, 90% of its circulating supply is already out, which is trading at $2, compared to a token that is trading at $10 with only 10% of its circulating supply out in the market. So you explained that really well, and I grabbed the concept at once. So thank you very much for saying that. So I want to ask you, what makes you believe you can redesign incentives when every attempt in crypto has eventually been gamed?
I think incentives only work if you have a real product with adoption. Incentives don't work as I don't believe in incentives that derive from token inflation. Like if your incentives are based on, I'm going to reward you with a token that I can mint unlimitedly. For me, that's not a business model.
That's not incentive.
I believe in it. Yeah, that's not incentives, how I look at it. How I look at it is, that's exactly. You build a company. That company has a product. That product has users. Those users pay money. A portion of what they pay, you give back to the ecosystem participants. That's how I review incentives. So the question then is, why aren't incentives working? Because most companies in crypto don't have real products earning money. So all that happens is infinite dilution. So yeah, my take on that is build companies that earn money early, and then after you do that, make sure that you share the revenue with the people who can help you scale further.
Revenue generation shouldn't be alien. It should be the first thing on the book, if I understand you
I believe
correctly.
so.
Yeah. Thank you. Thank you for reiterating that part. So there is this question that I love to know from your perspective. I'd love to get your answer. And what's one truth about token launches that you know from your data that the industry would panic if you publish it? I mean, you've seen a lot of token
Yeah,
launches. What's one truth that you know, but it mustn't get out? Because if it go out, there's gonna be trouble.
I would say it's not as much a secret anymore, but it's still. I mean, for some reason, some projects still launch at very high valuations. When vesting unlocks without trading are a time bomb. They're a time bomb. It's like, when you sometimes have slept poorly and you click the snooze button, because you want 10 more minutes. You know what I mean? That is what vesting is for for a lot of companies, is that they launch a token, they want it to trade at a high valuation, and they don't want to deal with the sell pressure now, so they put a 12-month cliff on it. We'll manage it in a year. We'll manage it in 4 years of unlocks. You know what I mean? I think it's not a it's not a secret per se, but I think I cannot emphasize enough how little vesting matters. It has no impact if you don't have a way to get the cost basis of those early investors out. Um, you have to replace the early investors with new people who have long-term conviction, who buy the lock tokens at a higher price. Otherwise, the sell pressure is just sitting there like a time bomb waiting to destroy your chart.
Yeah.
So that's my take.
I mean, that's brilliantly said. That's brilliantly said. And I want to ask you something personal. And this is
Mhm.
something that I would love your complete honesty with me and with our viewers later on. Is you've been building for 4 years. I know there are moments that you're gonna ask yourself, nobody cares, but there are moments that you'll be asking yourself, Milad, what are you doing? Is this really worth it? Those moments, do they comes in
Yeah.
once in a while? Do they comes in often? And how do you handle them? How do you tackle them? This is just for other
Oh, this
founders that will be watching you later on.
I have to commend you, because this is such a fantastic question, and I think the public perception of what a founder is versus what it is in reality is so different than what people think. I don't believe, like, real founders, I don't think people realize how much blood, sweat, and tears and constant, we call them dick punches in our company, you have to be able to sustain. At the end, you sort of get balls of steel, because you're so used to everything feeling like it's working against you. The reality is, building companies is extremely difficult. There are no handouts. There are very few people that help you. Every time you think something is going well, there's another variable. Nothing is given to you for free.
No.
And what sorry, go ahead.
No, no, no. Go on. I was just laughing when you
Okay.
said nothing is given for free. No one is willing to help for free.
Yeah, exactly. Like, you don't get any favors. Everything you see when you see success is, you don't sort of see what was underneath to
What's
make
the
that
price?
happen. Yeah, what the price is. And I think what separates a fantastic founder from a good one is to be able to live in that space, to be able to persist, you become hardened. You sort of become immune to a point where nothing can phase you. No external variable is changing your sort of motivation or mission. You sort of become bulletproof because you've experienced so much that you don't rely on external variables for you to fulfill your mission. You have an inner motivation and vision that doesn't depend on other people, and I think like this is hard to do alone. That is why it's very important to have a great team. Like in reality, you need to have partial goals that you meet all the time to keep reminding you why you're doing this, who you're doing this with. So you have to have someone to cheers with at the end of it all. So yeah, that's my take on that.
I mean, that's beautiful, and I believe that watching this episode later, a lot of founders will find so many clues or so many cues that they could use to actually progress themselves. But when was the last time you felt genuinely alone in this journey? I know you felt alone almost all the time, but when was the last time you felt it so bad that, man, I'm all alone by myself? Nobody gives a shit. When was that time?
I'm going to be honest. I am very fortunate to have a great team around me.
That's
So
beautiful.
I don't feel alone as an individual, but I do feel like sometimes we feel alone as a team, especially
Yeah.
here in Norway. It feels like sometimes the system is really working against you, that you have more people trying to push you down than trying to lift you up. And we're moving to New York soon. I think there it's like you have more people that are like-minded building in the same space.
Yeah,
It's
yeah.
sort of more fun and engaging. But I don't really feel alone anything we do in the company. I feel like I have my brothers here with me on the front lines, working hard every single day. It's sort of like we are at war, and we're trying to save save the world. That's sort of how it feels in some way. And I have my team for that.
That's beautiful. That's beautiful to hear. But let's talk about the dream. The dream are so the same, but the price we pay to actually actualize our dream are different. I'm paying the price, you are paying the price. So I want to ask you, what is the cost of being obsessed with fixing things? What's the cost you're paying right now? And I'm not talking about the money.
Hmm. Yeah, I think very easy traps is health. You know what I mean? It's that you don't take care of what you eat. You don't take care of. You don't go to the gym. You know what I mean? These are the first founder traps. After a couple of years, you get better at managing those two. Okay. Um, Third is like mental stress.
Yeah,
As a founder, you go through phases. You have like this 1 month, we're going to grind our entire ass
yeah,
off
yeah,
1 month straight, and then you're dead for a week.
yeah,
You cannot talk to anyone. It's normal.
yeah,
It's at least
yeah,
for us.
yeah,
And then you reset.
yeah,
It's getting used to that. But the biggest sacrifice, obviously, it's family. It's family, it's friend relations, and it's your girlfriend, wife. I don't have kids, but obviously, if you do that, kids, um, it is very difficult in a phase that, let's say, we are in, to build something and manage those things. And I'm saying this, I'm not saying it's impossible to be a founder. I'm saying there are different stages in a company. When you're trying to find product market fit, when you're trying to figure out the go-to-market strategies to scale, you cannot depend on others for that. I believe you have to do it yourself and pave the way as a founder. And then maybe once you have done it yourself and proved it, after 2 years, you can hire someone who can do what you have proven and scale it up. But when you're in this early phase, only you can do it as a founder. It's going to take time and energy and sacrifice. And unless you're willing to do that, building a company is not correct, so to speak.
Yeah, so we've got the rapid fire question now, which I'm gonna ask you one simple question. You give me one simple answer. You don't have to think about it. Say whatever it is in your head. So number one is, what's the most overrated concept in tokenomics?
Yeah, I would double down on Cliff's investing schedules having any real impact on decreasing seller pressure.
Okay,
It does not decrease it.
one founder you admire the most.
I really like Luke from Pixels, the game in Web3.
Okay,
I think he focuses on a lot of exciting stuff I'm passionate
your
about. So
most painful financial lesson.
investing in projects I have not done enough research in, which is hundreds of times.
Norway or Dubai? Where do you love the most?
New York,
New York.
New
Okay.
York, man.
Okay, New Yorkers, you should be expecting this man is coming into town. So, what would you be building if crypto disappeared tomorrow?
I would be building another company that solves another problem, something that has a profound impact on the world, or I would have some sort of farm or animal sanctuary, something. Just be with my girlfriend and raise cows and chickens.
That's beautiful. And now to the last part of the show, you get to ask me a question. Anything.
Yeah, so maybe I would ask, when you do your job, um, what is the thing that matters to you the most and gives you most happiness?
When I do my job, what is this thing that matters the most and gives me happiness? Ah, that's a tough one. It's really tough not to crack. But I'm a simple man. And if you really know or you realize, I love supporting people that are actually building something impactful. And that was the major reason why you are here today with us. We got to know you from a very good friend of ours. He highlighted what you are building. I see it for myself. And I'm like, okay, this person is building something good and they need our support. And that was what brought you here. Seeing people like yourself wins, it gives me unlimited happiness because I know if you win, that's one trouble uh, saved. So yeah, doing that gives me joy. It gives me happiness. It gives me a lot of energy as well.
That's great. And earlier when I said you don't get any free meals and you don't get too much help, I can attest that you did give us this opportunity at least, and I really appreciate you for that, and I will not forget it. And yeah, it's been great talking to you with these questions. I think you're asking all the right questions, so thank you for that.
It's our culture in Uncensored Grid to ask the right questions. That's what we built our podcast upon. That is our benchmark. That is our fundamental. That is our foundation. That is our culture. That is our everything. To ask the right question and to show the other side of the crypto entrepreneur. Milad, it's been an honor talking to you today, and sooner or later, we'll love to bring you back to even highlight more of what you've been built so far. But with that being said, we'd love to take our break and say ciao to you. Have a great and wonderful day.
Thank you so much. It was a pleasure being here.
Bye.
And until next time.
This is Uncensored Grill with Debo. No filters, no safety nets, just intelligence under pressure.